Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Sebastian, Chief Operating Officer over at Option Pit, to discuss the Nasdaq Volatility Index, or what we call VOLQ, and associated trends and strategies to trade those trends. Mark, it's great to see you as always. Welcome back to Trade Talks. And coming into expiration this week, also it's the last month of the third quarter as well.
Yeah, there's a lot going on. We have quadruple witching on Friday, which is the expiration of futures options, index options, and equity options all at once. Those are always bring some fireworks. And we have the news on Apple losing their lawsuit to Epic Gaming, which caused Apple to tank on Friday and has really put some life under volatility as a whole. And VOLQ in particular has started to catch a little bit of a bid.
Are there any trends that you notice going into options expiration as it applies to VOLQ?
Yes. So over the last 5 months, we're now in the 6th month. The week prior to expiration, the market seems to sell off. Volatility tends to get bid. There's some belief that this is around market maker and trader positioning, but it's been a pretty consistent pattern since May that the week before options expiration can be really soft. What's interesting is the shortest duration of any of these selling took place during the last quadruple witching, which was in June. And typically we've seen that selling start the week of and end on expiration. This selling started a little earlier. We started seeing volatility get bid in the middle of last week and the market getting softer starting Tuesday last week. So a little bit of a twist on the pattern, but I'm really interested to see if we have a down day this week that then gets bought and leads to a new rally, because every one of these options expiration weeks has led to a new all-time high in the Nasdaq and relatively new lows in VOLQ. So the pattern seems to be get bid into option expiration and then give it away for the rest of the month. I'm really interested to see if that continues. If that pattern breaks, we could be in for some trouble.
And Mark, even though options expiration kind of gets the headlines, doesn't most of the positioning take place prior to that?
Yeah, all this positioning is months old, and now that it's starting to come off the books, that is what can cause some of this market volatility that we see. So it's the process of traders dealing with positions coming off the market, dealing with rolling positions, changing positions, futures coming off, that can really cause markets to fluctuate pretty wildly the week of expiration. But this pattern is, it's been there for 5 months. It was not something we saw in this regularity with this kind of like set your watch to type of pattern up until then. Obviously VOLQ was a lot higher, there was a lot more noise. Now that the noise has come off, we're in a spot where we could absolutely see some sort of buying midweek from traders now being through a lot of their repositioning.
So Mark, to wrap up here, knowing that this pattern's been pretty strong and you have some historical context to base it on, as a trader, whether you're using NDX options or if you're going to use the Qs or if you want to go into the futures market and use VLQ, what's a potential way to position into this Friday?
Yeah, so I'm looking for a day where the market opens down strongly and then starts to bounce. That's going to be a sign that we are at a bottom. Every one of these days where we've opened strong has been an opportunity to go short. I might look at triple Q calls expiring on Friday, something somewhat out of the money, relatively inexpensive, because we could see one of those bounces midweek, and those bounces have been fast, furious, and strong.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.